Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for the week ending Friday, December 14th, 2018. I'll figure do a quick video, talk about what happened today and what didn't happen today. So what happened? We had a pretty ugly day, but again, nothing. When you look at the trading over the last few months, we were down 1.84%, which is run of the mill for QQQ lately, well within the daily range. And I'll get to QQQ. I'm sorry, this is SPY. We'll get to QQQ here in a second. So what did happen today, or what didn't happen, is we did not make a new low. We did not undercut the previous lows. So we're still above the lows on both QQQ and SPY. Again, I'll get to QQQ in a second. Small caps, they made a new low, but remember, keep in mind, small caps, if you add up all, there are a lot more stocks in the Russell 2000, a lot of more small cap companies than large caps, but they pale in comparison to the market cap of the large caps. So if you add up all the large caps and all the components of the S&P 500, it dwarfs the small cap index. So small caps will follow, and they're also a risk-off trade. But again, they did make a new low today, so I'll point that out. But we have some really strong divergences building, and my guess is next week or so. I think we're getting very close to bottom. Barring a big washout move, you can see I have a support zone. This would be my max downside target if there's, some type of big. We finally get that capitulation sell-off, which by the way today was not. Today was definitely not that. We didn't see panic selling again. The indexes were down well within their normal ranges today, and so I wouldn't consider this that capitulation type sell-off. And again, if we get it, maybe down here to 133.45, but we're also coming up with some pretty decent support around 139 on IWM, and I think this one's poised to run and probably outperform both QQQ and SPY on the upside. But let's get to the big caps because that's what it's all about. That's what will determine where the market's going. So again, we don't have a low. Now, what was different today, I'm going over, pros and cons, bull bear stuff, just trying to hit all the check boxes. We've had roughly with a couple of these brief spikes, but here's where trading normalized. I keep talking about these roughly three lows in SPY so far. Again, we had these brief intraday spikes. So what does make this one different? If you draw a line there, which I've been showing you on my 60-minute chart, so we say that's where trading normalized. We have the most number of candlestick bodies there and/or tails or shadows, and just these two spikes below right here and here. Now, so what was different today is we sold down, and again, it wasn't a waterfall sell-off, but we just went down every day, and there was no buying. No buyers stepped in at the end and ran it back up to that level as they did before. So that's a little heads up. That's a little checkbox for the bears. I mean, obviously the fact we're down is a checkbox for the bears, but that's not good that the bulls couldn't buy that. Buy it back up here and at least park it back up on or above support for the week. So, that keeps everyone guessing. And the problem with this, if I say we'll give this one to the bulls, this one to the bears, today was clearly bearish, being down and coming this close to lows. So let's not take anything from that. However, this market has been plagued with one bullish day, one big green candle, one break of support, one pop over the key exponential moving averages after they've been recovered, followed by another bearish down day. So it's almost like I keep using the analogy, two big giant heavyweight, sluggers just duking it out, one exchanging blows. One guy takes one round, the next takes the next. So we'll see. But as of now, again, the markets, even as, I said here when I was looking for a little rally and even some more upside, we fell a little shy of my targets that I was looking for on this one. But I continue to maintain that the markets were still in a very precarious, and they still are in a very precarious technical position. We're sitting on the edge of some key support. And so far, like I said, the bulls had an opportunity to take this and run. They had an opportunity today, earlier, to take it and close it back up, and they didn't do it. So it's not bulls, bears. There's not enough buyers. There's still more sellers in the market as of now. We have these potential divergences. Those are potential bullish developments, but we don't have any buy signals. We don't have, maybe a big green bullish engulfing candlestick next week. That would certainly help. But from here, I still think that next week will most likely be the end. I'll tell you, this thing's gone on for a while now, a few months. So maybe we continue to grind around for a while. But I suspect next week, one of two things will happen. Either today will prove to be a one-day wonder, we'll gap up tomorrow and I'm sorry, on Monday, or we do get a final, capitulation type sell-off, maybe meltdown, one big red candle, maybe intraday, and then maybe it turns green by the end of the day, or we get a big red candle and follow up green the next day. But I do think, based on everything I'm seeing here as well, some big support levels coming up that we're at least in price much closer to a bottom, and I think so in time right now. Again, I'm looking for next week. So what will I be on watch for if we do get that big sell-off? Any type of candle next week. If we get some big daily candle that can somehow, I mean, it's possible it'd be a pretty big one that would engulf a lot of these previous candles here. That would be quite bullish. So there's a lot. We can sit here all day long and talk about potential bullish developments. One of those again would be a bullish some type of bullish reversal candlestick, especially if it's followed up by another bullish candle. But for the time being, the trend remains bearish, and to mostly really sideways, if you look at the last few months. But with the price action, the MAs pointing down, the moving averages, the recent bearish cross, the trend indicators pointing lower. This, you have to give it to the current trend. They say the trend is your friend, so we'll have to leave it at that. All right, so again, we don't have yet. We came close, but so far, the low in SPY was right here on the 10th, and we have QQQ, which is still making a series of higher lows so far. Now, that's not an uptrend. Let me give you another board here. Let me find a clean board. Here we go. There it is. All right, so here's what I'm looking at on QQQ. We do have a series, again, of so far of higher lows. Now, that doesn't make an uptrend. An uptrend is a series of any security making a series of higher lows and higher highs. So right now, we clearly have a series of lower lows or lower highs up top, and we had some lower lows going into this point. And so far, QQQ, including today, is down as much as they were, down 2.5%. Again, that's easily within the realm of an average day recently. We've had much larger days, much larger intraday swings. So it's a red candle, but it's not huge. And again, right now, it did not take out the lows. In fact, it didn't even take out the previous reaction low. Nevertheless, the low back here so far, which remains a low for now, and that's back from November 20th. So again, I'm just pointing out what I'm seeing. It doesn't mean that's super bullish by any means, because we haven't reversed. In fact, we haven't effectively put in another higher low until we reverse. So we really need to see Monday. We need to see a green candle, because Monday we can come down and we can still take out that low. Right now, the very near-term trend since Monday is down right now and bearish. So this will have to be continued tomorrow. I maintain what I said earlier. I think that the RR, the risk reward, to the downside is not very favorable here. And if you are short, you can stay short, keep stops. But this market, like today, can gap against your position, long or short. And with today being a weekend, we have 2 extra days of overnight risk. I mentioned earlier, for the first time in about 6 months, moving money back in a 401k back into stocks for the first time. Gradual position, but my first. And the thing is that this worked out good, because when you transfer, anytime you have a 401k, if you say, okay, shift money into equities or any transfers you make, they give you the end of day closing price. So that actually worked out good. If we can have a reversal next week, that would be nice. But it's not. If not, my plan is this: on long-term accounts. Trading accounts are a whole different thing, my active trading account. But on long-term funds where you don't have the flexibility to move in and out very rapidly, if we continue down, I will continue to scale, a pretty rapid scaling. It all depends on how quick we go down. If we have a big down, of course, maybe move some more in. If we continue to just limp down like this, over the next few weeks, scale in gradually. Or if we somehow reverse, let's say today, let's say this was the bottom in QQQ and we start moving up, I'll continue at as well, but not too much. Once we start to get up here, again, you have a ton of overhead resistance. You have these moving averages. You have this downtrend line, all that. So I'm just looking for a tactical trade here, a tactical bounce. I'm treating this as a bear market, or let me back up. I will be treating the next rally, the next swing tradable rally, if it lasts for more than just a few days or a week and a half or so, like these previous ones. I'll be treating that as a bear market rally, even though we are not in bear market territory yet in the broad markets. We have a drop of about 16% in QQQ, and so far, the stock market or the S&P 500, if this loads, and there it goes, is off. Well, from the high right here, we are off, and that was through the recent lows here on Monday. We're down about 12%. So we're still basically just barely into technical correction mode in the market. Corrections a drop of 10% or more. But again, I don't want to spend too much time revisiting everything that I've covered in the past. Long-term trend line breaks, these moving averages, key moving averages were below, death crosses, everything else, and that tells me that this is probably the first leg down in a new bear market, and as such, we'll treat any rally, whether it comes soon next week or whether it comes in January, and there's some more downside to this one. Again, I'm just, I think shorting here is like picking up nickels in front of a steamroller. Anything's possible, maybe a big meltdown scenario if something big happens in the financial markets and we drop another 10% from here before we rally considerably, before we come and back test these moving averages again. But as of now, I'm looking and I'll be watching if and when we get back up to those triple top highs. Remember, the S&P 500 has sort of we're really where we were, as I covered in a video today. We're where we about close where we were on the initial leg down on this first thrust down in the correction. So this has been the correction so far. Not that we can't add to it, but with a big sideways trading range, and we're right back to where we were on that initial leg down back on October 29th. The only thing that makes it a little different this time is we have some pretty strong bullish divergences again on the indicators, or potential divergences. Trend indicators are still pointing lower in the PPO and RSI. And to just wrap it up on the futures, this is NQ E-mini 60-minute chart, the time frame I've been focusing on lately. Looks like they parked it right around that support level there. They at 65.98, and they parked it at 65.98. Again, these trend lines, I move them around. You can't even trade at 65.29, 65.80, 65.98.29. NQ trades in quarter point increments. But you can see either way, there's quite a few reactions that define that support level, and that's where they closed it today. And the futures, just like QQQ, as I showed you a minute ago, are pretty much making a series of higher lows so far. Although, again, this movie will be continued next week. Trend indicators are pointing lower. So to effectively confirm that lower low, we'd have to reverse before taking out this low. So that's where we're at right now, and we'll just have to see next week. ES, the S&P 500 E-mini futures, as I showed you, they're right now pretty much challenging that October 29th low. This is really the primary low number one. We're trading normalized low number two, and we've had a couple breaks, and this is pretty concerning. We tested this level. We had triple bottom and SPY. We broke it the other day. It had the potential to be a bear trap. The bulls had all opportunities to build on this, having this be a bear trap, I should say. But boom, we fell back below it again. So I can tell you again, today, I'm not trying to spin anything as positive. I'm showing you some developments that, what happened today and what didn't happen. But overall, this is bearish. The fact that we dropped below this level again, and we'll have to see if it can be recovered next week. If not, maybe this opens the door for a big flush out move next week. And I'll leave it here with this 60-minute chart of SPY. There's that, I have a couple different 60-minute charts. I have 262.90. We'll call it 263 right here, give or take. Again, effectively the three lows that have been undercut with a couple, intraday or one day undercuts today as well. And there's that scenario laid out yesterday. If we do get a washout move, it could be bigger than this, but all we have to do if we slightly undercut that recent low on Monday, so let's say a gap down at the open and a reversal, that would give us the bullish divergence here on the 60-minute time frame, which we haven't had for a while. We had, in fact, the last time we had 60-minute divergence, we had a small divergent low right here. You can see positive divergence with prices making equal highs, and that led to this rip. And before that, we had a nice big 60-minute divergent low right here, both the PPO and the RSI, and that led to this nice rip. So we're coming in at lower levels now, but if we do get this scenario, and it could be negated if we go down. Let's say we gap down and just completely melt down next week, and we go down, 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 then there's a potential that these divergences will be taken out once that prior low is undercut. But as of now, like I said, I'm looking more for signs of a reversal at this point, even if there's a little more downside. And I think that would be just a beautiful scenario to see the futures down on Sunday night and into Monday morning, gap down. I'm sure the bears would pile in with both fists. You'd get some new shorts coming into the market, and then if they could gun it at that point and do that, give us that low little flush out move, keep those divergences intact, that might set the stage for a nice rally and take us back up to that maybe that 281 level again, which so far has capped all the advances. And that would be a considerable move in the S&P 500 if we did it. That's about a 10% or so rally, and I think that's about in line with what I'm looking for, at least at this point in time, on the next bear market rally. So, or whatever rally it is, whatever you want to call it. All right, we'll end it here, and we'll just have to pick up Monday morning and see how things look. This has been Randy Finney with Right Side of the Chart. Have a great weekend.